It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. The U.S. government is shut down. It is the third under President Donald Trump. Agencies told not to start carrying out plans for a funding lapse. Market disruption, stocks and bonds falling as the shutdown threatens a temporary blackout in economic data. And we'll have live coverage of Bloomberg's Women, Money and Power event in London, featuring the most influential female voices in finance from around the world. So once again, we're 5 hours into a government shutdown. The Fed stays open. Commerce Department badly affected, so is the BLS. Likely no employment data from the government on Friday. No non-farm payrolls. We will get ADP. We did get JOLTS. But I love what the economist of UBS, Paul Donovan, said today. Private data is like viewing the economy through a keyhole. Very clear, but a very narrow field of vision. So that'll give you an idea of what the Fed is trying to deal with and what markets will be trying to deal with when it comes to trying to perceive what the monetary policy path forward is going to be. As you can see, traders have turned risk off. S&P futures down, NASDAQ 100 futures down, Russell 2000 futures down. For small businesses, they're not going to be able to get loans until this thing turns itself around because that whole situation has shut down. Let's look at yields. For the moment, we're not seeing too much movement in yields. We're about where we were yesterday with the 30-year at 474, the 2-year crucially at 360.23. It's important to note that coupon payments won't be affected, debt servicing won't be affected as of yet. We do have to wait and see if rating agencies are going to have a say on all of this, though. I do want to also mention that some perceived haven assets are rising. Gold, for example, hit a record earlier. It's actually peaking towards $3,900 an ounce. And interestingly, crypto has taken a turn up in the last hour or so. Bitcoin, Ether, and some of those tokens are on a tear. But let's get to some individual stock movers now. Over to London and Kriti Gupta. Kriti.
Bonnie, thank you so much. Let's kick it off with Nike here this morning, soaring higher by 3.7% in the pre-market. This one's a little bit of a head scratcher, Bonnie, because you're seeing two very different dynamics. Nike, of course, the maker of sportswear, of athleisure, of sports equipment, you name it, has a lot of international exposure. So when you have that sort of tariff impact, Nike is one of the first stocks that get hit, especially when it comes to China. Except here's where it gets really interesting. They actually came out with their earnings last night. Fabulous earnings, strong across the board, but they increased the amount that they're going to hit on their bottom line when it comes to tariffs. $1.5 billion. That is higher from the $1 billion forecast they gave in the last quarter. Really crucial because you would think that the higher hit would actually mean the stock maybe trades a little bit lower in the pre-market. The opposite is happening this morning, Bonnie. You are actually seeing it raise higher. And it might just be this idea that clarity remains king when it comes to some of these American stocks and the tariff impact. That is the Nike story. Let's talk about the Novo Nordisk story here. I kind of want to use this stock as emblematic of what you're seeing in the pharma sector around the world. I woke up this morning to futures trading lower. I am now talking to you as the pharma sector is really pushing around not just the FTSE 100 to some green on the screen this morning, but also the Swiss index. This comes after the news from Pfizer and the Trump administration yesterday that there can actually be an agreement to alleviate some of the pressure on tariffs. So you saw Pfizer higher in yesterday's session, a little bit of a catch-up trade in Europe, despite the fact that technically today is the day that pharmaceutical tariffs on Europe actually kick in. Nevertheless, Novo Nordisk and the entire sector higher to the tune of about 2% this morning. I want to end on Occidental. This is a stock that we have our eye on when it comes to the deal space. Still maybe getting a little bit of the Buffett bid, higher by 1.3%. OXY is your ticker, trading about $48 a share. Crucial here because Warren Buffett, who's been very active when it comes to Occidental, is in active talks to talk about the OxyChem business, a $10 billion deal if it does in fact come true. So Occidental Petroleum getting a little bit of a bid this morning, Vani.
All right, Kriti, thank you so much. That is Kriti Gupta there in London. I do want to break some euro area CPI data for you all. Coming in as anticipated, the preliminary September consumer prices data show a rise of 2.2% as expected. Core CPI in the euro area up 2.3% year over year, and that also matches estimates. As for the euro, it is trading stronger today at 117.52 right now, although it has to be said that the dollar index is weaker for obvious reasons. Well, in just moments, we're going to hear from outgoing GSK CEO Emma Walmsley. And later in the show, State Street CEO Yie-Hsin speaks to Danny Berger before an interview with Christina Minnis of Goldman Sachs. A massive show for you today. Bloomberg's Women, Money and Power event is currently underway in London. So let's go straight there. Let's go to a panel discussion with GSK CEO Emma Walmsley.
You know, it was 9 years ago in September that I was asked to take on the great privilege of leading GSK, and it was 9 years ago in December 2016, that I first started talking to Luke Miles about joining me on the great adventure of transforming the trajectory of the company. And, you know, when you decide to leave a job that you love, you hope for two things. One, that you've put a company in a much stronger position than you found it, and also that you manage to support the smoothest possible transition. And we've all seen examples of where it doesn't look quite like that. And, you know, I feel really good to have been able to do both. It's a very different company in structure and strategy and momentum and prospects, and most importantly, pipeline. And a lot of that I've built with Lou. But it really does feel like 26, and it did feel the right time to plan for a transition, because, you know, we did this period and we continue to upgrade our outlooks from 21 to 26. We're going to over-deliver on that. And it's 26 when, frankly, I believe the CEO who's going to deliver the decade ahead should be given the time and space to define it and its building blocks, and frankly deliver and over-deliver on our long-term outlooks, which I'm really confident Luke will do. So in that sense, the time is right for GSK, it's also right for me, and the most important thing that I can do in the few months ahead is really set him up. And I know he's going to do an outstanding job with a good team, but to set him up for the strongest possible momentum he can. And, you know, then after that, I'll start thinking about what I'm going to do next. And, you know, there's zero chance of any retirement. But it's all about setting him up now. Well, oh, by the way, and getting 2 more drugs approved by the end of the year. We've already had 3 important medicines and vaccines approved, and I'm hoping for another, you know, really significant multiple myeloma approval. And then by the end of the year, the world's first 6-monthly asthma treatment that reduces the kind of attacks that cause hospitalization by over 70%. So not stopping till the last day.
And so if you look at the horizon for the company, where are you seeing the next big breakthrough, big drug breakthrough?
Well, honestly, in our industry, which has a lot of commentary and a lot of noise and is very busy and matters in every country in the world, because it's such a huge allocation of government capital, and every individual cares about it too. But the only point of it is to innovate. Remember, we are an industry, one of the few industries that has to reinvent itself every decade because of the IP model. And it's probably been the most important move that I've made, you know, with the team, which was releasing Haleon to set up the balance sheet to be able to invest in innovation. We doubled the spend on R&D, and we now have 15 drugs, medicines and vaccines in our pipeline that should be launching, all material, all with potential peak year sales over £2 billion, should be launching by 2030. And I think 80–90% of them in the next 3 years. And they are in cancer, in respiratory disease, so whether it's asthma or COPD. In HIV, we've long been, you know, really leading pioneers in innovation. We're the first to bring long-acting drugs and solutions to both for prevention and for treatment to HIV. And remember, you know, when I first started work, that was a terrible death sentence, and it's now something we can live with as a chronic disease. And I hope we'll be able to bring a twice a year treatment for HIV. And then, of course, we continue to be committed to a vaccines business. You know, a bit of volatility in that market in one country in the world more recently, but there is no better, this is really serious, there is no better return on investment than stopping disease before it starts. And we shouldn't have short memories, whether it be about what happened in the pandemic just a few years ago, or frankly, it wasn't many decades ago when our children were, you know, dying of measles and, you know, the tremendous burden of polio or whooping cough and these things. And we're excited about the science that's coming through there too.
Yeah, I mean, and I also want to ask, as a pharma CEO, but also as a mother of four, what do you make of some of the rhetoric coming out from the US? For instance, pregnant women should not take Tylenol, as we know is paracetamol here, or that there is no need for vaccines, and how are you dealing with that?
Well, I'm not going to comment on the Tylenol business, but I would say what we seek to do in the US always is engage constructively, grounded in science, and answer questions with total, transparency. I mean, you said as a mum of four, I have given birth twice in New York, once in London and once in Paris, and they all seem to give different recommendations. And the pediatric experience, I mean, this is the thing that people have to understand, that health systems are very different in different countries in the world. And so, history shows that when vaccination rates drop, diseases tend to surge, and then vaccination rates come back up. So I think our job is to make sure we partner with governments and bring facts and science and keep calm. Our vaccines is actually the smallest business at GSK, our biggest business, and frankly, where the majority of our pipeline is coming through is in specialty medicines. So that's in oncology and respiratory. And immunology, and so that's why, even though it's been a bit bumpy, I would say, and we're a bit cautious in the near term, we've continually been able to deliver upgrades, whether it's in our annual outlooks or, frankly, our long-term outlooks too, because the pipeline keeps progressing.
And you spoke of constructively engaging in the US. Many of your peers are seeing constructive engagement as lowering drug prices in exchange for a reprieve on tariffs. We saw Pfizer's announcement yesterday. Two questions. One, are you considering something similar? Two, are there any new drugs that you would consider launching in the US and UK at the same price?
Well, first of all, there are multi-dimensional pressures or news flow. In fact, every day you wake up to some new flow for our industry. For the reason I said before, which is every government cares about it. It's a huge allocation of capital. It's, whether it's the NHS here or what's going on in the US, it's always a top topic. And if you look at yesterday's news specifically, I think that's a step forward, and it's progress. And you've seen the markets see that as well, because it's about constructive dialogue between the government and industry. And make no mistake, the US is by far the biggest priority market for our industry, because it's the best country in the world to discover and develop innovation. So far, by the way, there are others that are coming up very fast, but it's also the best place to, for some people to be able to access that innovation early. And if we want to lower the cost of healthcare, we have to continue to encourage innovation, but at a cost that is sustainable for payers, affordable for patients when they're paying to a certain degree out of pocket, but also sustainable for us, because we have to cover the cost of failure in a pipeline, because most things don't work. And absolutely, GSK is engaging constructively. In the state visit just, I can't remember if it was last week or 2 weeks ago, we were very present, and I made the announcement of that we were committed to invest $30 billion over the next 5 years in R&D and advanced manufacturing. We're very confident and committed in betting big on the US, and that includes having these kind of constructive dialogues around pricing and access. I'm not going to get ahead of whatever we're going to do next, but I'm confident that, and I'm optimistic that the industry and government can navigate through this together to make sure that we continue to support what matters most, which is bringing down the cost of healthcare by keeping people out of hospital with innovation. And the burden of disease and unmet needs is still so huge. 1 in 2 of us will still be fighting cancer. 1 in 3 of us, not most, people don't think about it yet, but the neurodegeneration is a huge burden. And so we've got to keep working to incent innovation first. And I think we saw some balance in that commentary yesterday too.
And in the UK, other pharmaceutical companies have been quite vocal about the government not doing enough both on drug pricing.
Yeah, this is an important point.
To encourage investment. What would you like to see the UK government do differently, and what would you like to see to ensure that your presence in the UK stays the way it is?
Well, let me first be clear. We are committed to the UK. It's our home. It's our HQ. It's our listing. We invest heavily here. I mean, we invest more than $1.5 billion a year in R&D. We invest in manufacturing here. And there are many things about this country, whether it's some of the best universities in the world, the eternal promise of the data in the NHS, but we've seen some recent moves on that in terms of translational opportunities and the clinical trials. And I think that is critical. But I mean, a bit to your earlier question specifically, which I didn't answer on the pricing, it is, and I've been really consistent on this, you cannot have life sciences as a leading industry for your country, whether it's here or in Europe, if you don't support a competitive commercial environment, i.e. if you don't recognize the value of innovation. And that is critical. And actually, again, I believe deeply in the value of constructive engagement. And actually, I think, we're seeing some movement with the government, and I think some recognition of the value that our industry can bring. And I think that's the most crucial thing that we need to get fixed to be able to move ahead together and keep this industry as a leading one for the UK. But, the UK is 2% of my sales. The US is 52% of my sales. Mm-hmm. So it's about getting FDI here. But, I'm not being distracted by all the listing questions that everyone gets overexcited about, I think.
That's my next question.
Okay, well, let's do that.
Don't scoop me on the question.
Okay, I didn't know, but, I perhaps could have anticipated it. I won't comment for other people.
But
there are companies that are well valued here, and I just think we should focus on what.
But in terms of liquidity, which is a perma pain point, it seems, we're seeing how the London market is doing. Would it be a consideration to do, for instance, what AstraZeneca did, or to move your listing to the US? Because, as you said, the US is such a big focus market.
As I said, we have no plans for that. We have an ADR there. It doesn't. Our listing location doesn't distract from where we allocate our capital in terms of investments, and there's no plans on that.
Okay. The other, while we are on a roll here, the one thing that we are seeing is national governments protecting or trying to protect key industries, sovereignty, and whether that's in defense or in pharmaceuticals or in tech. In what scenario would it make sense for GSK to combine with another UK pharma company to create a national champion?
Well, GSK has great prospects as we stand today. It's been fantastic to have this chance to lead the organisation through a step change in terms of operational performance and growth, and a real shift in terms of our pipeline prospects. So, I find it a bit hard to imagine all the scenario plans that could possibly be, but there's zero engagement on that kind of question at the moment.
So merger with AstraZeneca is not imminently on the cards.
No.
Okay.
I'm not sure where that came from, but good.
It's, anytime there's a change in leadership, there is always the question about an activist investor or a...
Oh, well, I've had experience of that. And I can tell you that what matters in our industry, and it's what I said in answer to your first question, the only thing that matters is the pipeline of innovation. Because that is what sustains our growth, and that is the point of the industry. That's the value we deliver to society. And it's hard. It takes a long time. Fortunately, technology, and this is that's why healthcare is the ultimate use case for everything to do with AI and tech. And I think it's going to become a more productive industry, and the returns will get better over the decade ahead. But that's what we need to focus on, more than financial engineering. And don't forget, there's nothing more disruptive to an R&D organisation. And I've done global mergers. I know what they take in consumer goods, but in pharma, there is nothing more disruptive to an R&D organization than, aggressive extraction of synergies.
Yeah. And so,
And it's not like the scale play is a question for many of us.
And, in that vein, before I get to my final question, do you still stand by your move to spin off Haleon instead of take that $50 billion takeover offer?
Of course. I mean, zero doubt on that. When I started, we had a completely locked up balance sheet. Mm-hmm. We had declining investment in R&D. We weren't doing any BD. And, half the pipeline of the industry comes from outside the core research of the main company.
Yeah.
So that was the moment to unlock the capacity of the company to invest in the reason it exists. And frankly, that's why we've delivered a step change in growth and a step change in margins over the last 5 years since we've been an independent company. And quite frankly, as someone who grew up in consumer goods, and I led that consumer business inside GSK, I built the 2 global mergers with Novartis portfolio and then the Pfizer one, I don't think I had a single question at a quarterly results about the consumer business. And when I took over as CEO, I think a lot of people had that question because of my background about whether I'd want to hold on to it. It was the opposite. It's like the consumer business is never going to be given the capital to invest in its own independent growth because the priority had to be the pipeline. So that's a 100% answer.
And finally, Emma, when you step down, the tally of female CEOs of FTSE 100 companies falls to less than 10%. Mm. When you took over in 2017, did you envisage that this would be the scenario in 2025? And, this is a place where we're trying to be optimistic. So what is your message to the future generation of female leaders or just leaders?
Well, first of all, you said, what did I envisage this? I've tried never to define my career by my gender. And it's always annoyed me a bit when you get the female CEO tag to everything you do. But at the same time, I deeply recognise, and maybe more so now than when I started.
Less than 10%.
Yeah, I deeply recognise the responsibility we have as role models. And nobody can debate. It's a serious problem when 10% of our leaders, whether it's in business and industry or in government or in the judiciary or in education, it's a serious problem when we are not more appropriately represented. And it's no coincidence that GSK has had a step change in operating performance whilst I have moved to a position where 50% of my direct reports are women, including the CFO, the head of digital and technology, the head of our US business. Remember, I said 52% of the company is a woman.
Yeah.
So, and actually we're up to, it's not just about the top table, but it's the next generation coming through. I meet regularly with the top 30 of the company because I believe one of our most important jobs is to drive succession. And half of them are women, and that's really the generation that's going to come through. And what do I say? I say, Ruth, go for CEO. I say to...
Are my bosses in the room?
Yeah, well, why not? I say to women, have big, brave dreams, and don't let other people talk you out of them.
That is
ask for help when you need it, work hard, learn from brilliant people who will help you stand up on the difficult days. And you got one life, don't waste it.
Thank you so much, Emma.
All right.
That was a pleasure.
And that was GSK CEO Emma Walmsley speaking to Ruth David, Bloomberg London bureau chief. Meanwhile, in the States, Congress blew past a midnight funding deadline, triggering the U.S. government's first shutdown in nearly 7 years, the third under President Donald Trump. For more, I'm joined by Bloomberg senior reporter Miles Miller. Miles, President Trump has signaled that he'll use the shutdown to also lay off federal workers, not just furlough. What exactly is he planning?
Yeah, this is a very different shutdown than the shutdown of the first Trump administration. What we know is that the president, and by extension his budget office, has asked for cuts to programs that should be eliminated. And what we know is that usually during these shutdowns, the 750,000 employees in the federal government who are usually furloughed then get back pay. But in this situation, it appears as though there is a significant amount of people who work in programs that the president does not feel are central to the mission of the federal government, who probably won't be returning to their offices. And, you know, this is all in an effort to shrink government. It's something that the president said that was a lot of good could come out of the shutdown. But if you really want to talk about it, it's about the impact of the shutdown and really the impact it'll have on global markets. The immediate global impact is economic. Jobs, inflation, and GDP reports won't be released in a timely fashion. And of course, that leaves the Fed with issues because what can they rely on if that jobs data, if that GDP data is not timely?
All right, Miles Miller, thank you so much. We'll chat to you again later. That is Bloomberg senior reporter Miles Miller there for us in London. I want to remind you, you can watch more of Bloomberg's Women, Money, Power event by going to Live Go on your Bloomberg terminal. But let's just take a quick look at how markets are faring now as the government is 5 hours, 26 minutes into a shutdown. We have futures pointed lower, risk off across the board. The dollar index down about 0.1%. Dollar yen weaker by 0.5%. The yen at 147.12. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. The U.S. government is in shutdown. It's the third under President Trump. Agencies told to start carrying out plans for a funding lapse. Market disruption, stocks and bonds fall as the situation threatens a temporary blackout in economic data. Elsewhere, we have live coverage of Bloomberg's Women, Money and Power event in London with the most influential female voices in finance from around the world. I do want to bring you some market action, though, on this first day of a U.S. government shutdown. As you can see, futures are pointed lower. They're off their lows of the session, though, as we approach the open. The shutdown won't end until enough Democrats accede to a short-term funding bill. Who knows when that could happen, but there's likely going to be no NFP report Friday, possibly even no inflation data October 15th. Paul Donovan of UBS saying private data is like viewing the economy through a keyhole, clear, but with a narrow field of vision. In other words, it's only somewhat useful that we can depend on ADP data. We really need that government data to know what the Fed's path for monetary policy could be. That said, we're not seeing too much movement in bonds just yet. It's not going to affect interest payments or coupon payments, anything like that. We do see the 2-year yield down about a basis point. The 30-year yield trading below 4.75. We'll be watching that closely. The VIX elevated, but just still under 17. Let's get to some individual stocks to watch now for the session. Here's Kriti Gupta. Kriti.
Bonnie, thank you. We'll start with Nike this morning, higher by about 3%. NKE is your ticker. So a double whammy here, because on the one hand, they did talk about reporting earnings that were strong across the board, a real turnaround story when it comes to not only their internal organization, but how they're dealing with the tariff threat. They also provided some clarity on what that hit could actually look like, talking about a hit to the tune of about $1.5 billion. That is up for about $1 billion in their previous outcome. Looks like those earnings overshadowing the tariff compromise. Another stock we're watching very closely, especially here in Europe, is Novo Nordisk. I think emblematic of the pharma rally you are seeing around the world, really taking its cue from the Pfizer story yesterday. The idea that a negotiation with the Trump administration can alleviate some of the pressures when it comes not only pharma tariffs that have kicked off as of today, but also how it looks in terms of building the investment and the infrastructure in the States down the pike. So pharma rallying around the world following the Pfizer lead. I want to end with some deal news, or potential deal news, I should say. Occidental very much in focus. We'll call this the Buffett bid, higher by about 1.4%, as Warren Buffett yet again thinks about, or I should say considers, according to reports, taking over OxyChem, which is part of the Occidental business, to the tune of about $10 billion. Those shares rallying this morning as well, Bonnie.
All right, Kriti, thank you so much. Kriti Gupta there. Bloomberg's Women, Money and Power event is underway in London. Bloomberg Open Interest co-anchor Danny Berger is standing by now with State Street Investment CEO Yie-Hsin, who just wrapped her panel. Danny.
Vonnie, thank you so much. That's right. I am here with the State Street Investment Management CEO, Yie-Hsin. Really excited for this conversation. Yie-Hsin, thank you so much for joining, and great to see your panel earlier this morning, too.
It's great to be here with you, Danny.
So this is your third year as CEO of State Street, one of the oldest banks in America, a storied institution, and it's been, let's call it a volatile business environment for 2025. We're talking just after a government shutdown, policy changes coming thick and fast. How do you judge 2025 so far?
Well, it has been a very dynamic year, let's say. But at the same time, we feel very good about the U.S. economy. Our base case is for a soft landing. We think that the Fed is making the right moves by starting with a 25 basis point cut. We're looking for another 50 basis points this year, 50 basis points first half of next year. Corporate earnings are incredibly strong. Right, the EPS estimates are supposed to be 11% this year, 13% next year. And so despite a lot of action and policy making, at the same time, we feel like the fundamentals are actually quite strong.
How does some of it change how you run State Street specifically? And part of what I think about is talent, for example. Changes to H-1B visas, tensions at financial and academic institutions in Boston, where you're based. Has that changed at all, how you think about bringing talent into the bank?
Well, look, I mean, we're examining all of those and thinking about the implications for our long-term talent strategy. What's important to keep in mind is State Street is a global firm. State Street Investment Management is also. We're in 30 locations around the world, 12 of which we manage money out of. And so we have so many locations in which we can attract talent.
Does it change at all how and what geographies you want to attract talent? Are you looking, for example, expanding more abroad versus the U.S.?
We're looking everywhere in all the major markets. Of course, we see tremendous growth as you think about the Asia-Pacific region, Middle East. But there's a lot of dynamics in every market, whether there's increased pension consolidation that we see in the UK, Ireland, the Netherlands, and then the tremendous growth in just wealth. And the ways in which individual investors are accessing investments is evolving by virtue of technology and personalization and scale and all of that. So there's so many opportunities. At the same time, we can focus on some of the challenges in the marketplace, but I tend to look at these longer-term trends and see a real role for us as a global, very significant firm being able to bring insights to investors.
State Street always investing in technology, and of course we're in the middle of a technological revolution, you could call it. How are you thinking about not just AI as an investment, but implementing AI within State Street?
There's so much promise across AI, just in automating basic tasks, but leveraging tremendous amount of data that we have. State Street is the second largest custodian bank in the world. And so a good 10 to 15% of all transactions we see. So there's enormous information that we gather that we can then turn into insights. And that's one of the wonderful applications of AI and machine learning.
Yeah, HSBC says that they've cracked the nut of quantum computing. Is that something that State Street's looking at using?
We are definitely looking at it. But I would say a lot of this is still early days. And it will play out over time. And to your point, investors are increasingly asking us about the implications of quantum computing, the digital currency environment, AI, blockchain. Unfortunately, there are a number of ways that investors can play those themes today.
Do you think ultimately it leads to just a more productive workforce, or does it also lead to a slimmer workforce too?
I think the evolution of roles will change. First and foremost, we really want our people focused on the areas they add most value and take out, those activities that tend to be more manual, more administrative. And if we can leverage technology, I think that's all the better. But also, I think from the investing standpoint, there's more insights to be gained. And then clearly, as we're interacting with more and more investors and understand what's on their minds, we can be in a better position to tailor solutions for them.
One of the other evolutions is the inclusion of private assets, private capital, for more wealth and retail-oriented investors. You've really been at the forefront with this. You've launched your second ETF with Apollo. What's next?
We're really excited about this arena. We see ETFs as sort of the vehicle of choice around the world. This year is likely to be another record year in terms of ETF flows. And for us, because we're such a significant ETF player, we're in a good position to partner with the likes of Apollo and Blackstone and Bridgewater to bring these great strategies that institutional investors have had access to for a long time and make that available to everyday investors. So we're constantly looking for what are those types of innovative investment exposures we can deliver.
And for the most part, it really has centered around credit. Maybe it's a little bit more liquid. Do you think all types of private capital make sense in an ETF wrapper? For example, real estate, private equity, VC. Does all of that make sense, or do you think it will remain just being credit that fits the ETF wrapper?
Yeah, look, I mean, ETFs, it's important that there's underlying liquidity. And, you know, we've seen that develop in the fixed income market. With our ETF, Apollo is providing firm bids. We're seeing interest from the street. So we want to make sure that that exists because that's critical. The nice part about the ETF structure, though, is that 90% of the liquidity is typically in the secondary market. So you're not solely reliant on the underlying to provide that liquidity. And so I think we have to be very careful as we evolve. And then ultimately there's this promise of tokenization, right? That could also be another way in which some of these more illiquid assets can then be available to people.
There has been this desire for these private assets, and part of it is just because there are less public companies. We have half the amount of publicly listed companies that we did in the late 90s. Other changes too, companies being taken private. We had EA last week, which was massive. At the same time, you have a administration that maybe will allow companies to report just twice a year instead of quarterly. One could view it as a move for these public markets to be less transparent. Obviously, State Street, you're very much so in these public markets. Do you think that is an issue? Is this a world moving where investment just looks less transparent as it once did?
We think it's actually going in the other direction because we see a lot of private markets firms really bringing different types of vehicles. You talked about what we are doing. We're also doing this in the retirement arena. We're the first to introduce private markets within our target date fund series. All of that requires sort of increased transparency, increased information. And with that, we think markets will begin to develop around sort of this private market space, even if the number of public companies doesn't grow dramatically.
All right, Yie-Hsin, we're going to have to leave it there. Thank you so much for joining this morning.
Thank you,
Fantastic to see you. And Bonnie, that is, of course, Yie-Hsin Hung of State Street. Lots of changes at the firm, whether it be diving into private market ETFs or looking at how AI is changing the future of finance.
Absolutely, Danny. Fantastic interview, and we'll be looking forward to more of those later from you. That is Danny Berger there in London, and you can continue following the panels at Bloomberg's Women, Money and Power event in London by typing LiveGo on your terminals. Now to other top stories trending on the terminal this morning. Euro area inflation accelerated in September, cementing the ECB's plans to keep interest rates steady for now. Consumer prices rose 2.2% from a year ago. The ECB's key deposit rate is likely to remain at 2% at their next meeting, October 30th. Taiwan has pushed back on a U.S. request to move chip production stateside to cover half of America's demand. Its vice premier says Taiwan never made a commitment to have the U.S. produce 50% of the semiconductors it needs. The latest comments underscore the tensions complicating trade talks between the two sides. Warren Buffett's Berkshire Hathaway is nearing a deal to buy Occidental Petroleum's petrochemicals business for about $10 billion. That's according to sources familiar with the talks. If successful, it would be Berkshire's largest deal since buying reinsurance company Allegheny in 2022. Coming up, the U.S. government has shut down. More on what to expect next. This is Bloomberg.
Federal workers do you plan to lay off?
Well, we may do a lot, and that's only because of the Democrats. And as you know, they wanted to be able to take care of people that have come into our country illegally, and no system can handle that.
If you want an indication of how serious Republicans are about keeping the government open, who wants the shutdown? There's no better proof than the fact that Speaker Johnson sent everybody home this week, ensuring a shutdown no matter what the Senate did.
That's President Trump and then Senate Minority Leader Chuck Schumer speaking to reporters before the U.S. government shutdown. This is the third shutdown under President Donald Trump. For more, Bloomberg Washington editor John Harney joins us now. So, John, Trump has signaled that he'll use this shutdown not just to furlough some federal workers, but to actually lay off workers. What is he planning?
Well, that has been a suggestion, a threat, as this closure of the government was approaching and as it unfolds. Now, the plans for furloughs and for what agencies are supposed to do during this period do not, as of yet, include layoffs, dismissals, that sort of thing. But it's certainly on the minds of federal workers and their families and others, of course, and people who may depend on these agencies.
Yes, and we know that certain agencies will remain open. I mean, the mail is going to continue, for example, TSA and so on, but national parks, that's going to be affected. The Congressional Budget Office estimates about 750,000 employees will be furloughed and a cost per day of $400 million in lost compensation. Curious as well as to what else is going on around government. So the White House has now pulled its nomination to lead the BLS. What's behind that move?
Well, the BLS, it's interesting, the BLS will shut down. And of course, any nominations or any of that sort of thing will have to be put off. And the jobs report this week will not be will be delayed at best.
There you go. That is E.J. Antoni, who had been the pick for the BLS. That pick now scrapped. Also, the CFTC pick scrapped. Bloomberg Washington editor John Harney, thank you so much for joining us this morning. We want to go back now to London for Bloomberg's Women, Money and Power event. Open Interest co-anchor Danny Berger is standing by with Christina Minnis of Goldman Sachs. Danny.
Bonnie, thank you so much. And indeed, I am here with Christina. Thank you so much for joining this morning. Wonderful to see you. And look, you obviously oversee a lot of these credit markets at Goldman Sachs and acquisition finance. And what a year it has been, especially recently with these big tech AI players coming in to look for this market for financing. The statistic is they've raised 70%, the tech giants, from what they issued in the same period last year. How does that change the contours of credit markets to have these tech titans such large participants?
Well, the good news is the investor appetite is very strong as well. And so when you look at investments in this infrastructure, which is what this is around, obviously AI, most investors have an allocation of desire of like 8 to 9%. And if you look at where they are, they're only in the single digits. So number one, you have an investor base that is very open to want to invest here. Number two, you have great formation of capital in the private markets and in the public markets to support this need. And we've all talked about large numbers, 100 trillion by 2040, to support all the needs across AI, infrastructure, and compute. And the good news is over that period of time, our capital markets are there to support this demand.
Are there some areas where we've gone too far? And I just think of the Oracle debt issuance, for example, that we had a few weeks ago, where you have them issuing 40-year debt. And the spread is something like 1.37 above treasuries. It's very, very tight for a time period that is essentially who knows what the world's going to look like then. Right. Does all of that make sense?
I think you have to focus on supply demand as a technical, right? And I think that's a big element of why the markets continue to be so supportive. There's a lot of liquidity in the system, and they need to stay invested. We did a transaction last week for a BB company, and it came at a negative new issue concession, and it's the largest senior unsecured note that's come in the last decade. A negative new issue concession. It just shows you markets are positioned to invest.
Does that mean, though, that risks in some cases aren't appropriately priced?
I think there's been a lot of discussion about what the appropriate risk premium is. One of the things that we're excited about around credit in general is the macro backdrop so far is set up what we almost call a Goldilocks scenario, which is the economy is showing some of the macro factors that would suggest easing is in store, which is good for credit. and good for companies and good for cost of capital, but it's also not so weak that people are concerned about growth. I think the U.S. economy has been remarkably resilient. We've spent a lot of time with our European clients. They're seeing signs of growth, also in Japan. So there is a macro setup that would suggest credit has still room to run.
And again, you put on top of that the demand, which you've been talking about. I mean, is there going to ever be a scenario that you can foresee where spreads widen materially and stay there? For example, April 2nd has spreads widen. They immediately snap back. Are we just in tight spreads for the foreseeable future?
I would say you probably get some vol periodically, like April. And again, what could really change the spread widening is real macro weakness, but also a tremendous amount of supply of new money. And so we probably should talk about some of the large deals that are getting announced.
Can we?
Yes.
I mean, last week,
exciting.
And I know there's some specifics you can't exactly talk about because you've been involved in some of them. Speaking of which, the $55 billion largest LBO with EA. One of the interesting things about that, though, was that it was entirely financed by JP Morgan. Is that a win for banking to say that banking is participating in this and not private credit?
Look, I think in that scenario, because we were the sole exclusive sell-side advisor, confidentiality was very important. If you noticed, the deal didn't leak until the very end.
Yes, well done.
A large part of that is driven by sole financing provider, sole sell-side advisor, which we speak a lot about at our firm. So I think it's a very good sign in a situation like that where the board wants certainty and speed and confidentiality. And also, I suspect, knowing how that deal will likely be received in the markets, it's been public about the size of the financing. It's $20 billion. I think my chair is sliding down here.
Come back over.
Sliding down. I don't know why it's moving. But $20 billion for an LBO seems large, but we've worked with our colleagues to say that's very doable, imminently financeable, and it will go very well. And while private credit, I'm sure, could have stepped in there and supported the deal, I suspect the pricing of that debt, when it comes into the market and we run a full auction for that paper, will come inside what private credit would have been able to do.
And just quickly, Christina, because we're almost out of time, but I know you've been very bullish on the return of M&A. Do you expect more deals, if they are of this size, to have the same sort of structure and contours then, just given the benefits that you're talking about?
Yes, I think we're going to see the return of large transactions. We're already up. The $10 billion size transaction year to date is already up meaningfully. And with sponsors, the number's up 80%. And I think they're going to avail themselves of both private credit options and public options. And we're, as you know, at Goldman Sachs, we have one of the largest private players in the world, plus our agency. We're agnostic.
Well, Christina, we're very excited to hear what else you all are going to be up to this year. Won't ask you to break confidentiality, but it's an exciting year to come. And Bonnie, with that, I will toss it back to you. That's, of course, Christina Minnis of Goldman Sachs on already an active year and more activity to come.
Danny, thank you so much. Danny Berger there. And you can continue following the panels at Bloomberg's Women Money Power event in London by typing LiveGo on your terminals. This is Bloomberg. Now a look at what's ahead today. European Union leaders begin an informal meeting in Copenhagen to discuss support for Ukraine. Then, all hail private data. It might be all we get for a while, given that we're in shutdown. 8:15 a.m. we'll get ADP employment data, and at 9:45 a.m. the S&P manufacturing PMIs for September. So to that end, let's take a look at the macro picture as we are 6 hours now into a government shutdown. As you can imagine, S&P futures lower, though we're off our session lows. Not too much movement for yields, down a basis point on the 2-year, a weaker dollar. That's it for Bloomberg Brief. Surveillance continues the conversation.